Good morning, everyone, and thank you for joining us. My name is Michelle Waitley, and I am the Executive for Commercial Real Estate here at NAB. As we begin today, I'd like to acknowledge the traditional owners of the lands on which we meet. I'd like to acknowledge the Wurundjeri people of the Kulin Nation as the traditional custodians of the land on which I am joining you from in Melbourne, and I'd like to pay my respects to all elders past, present, and emerging. So welcome to our August quarterly webinar for our property market series. Based on your feedback, we have selected the residential property market as our topic today. We have a housing crisis with impacts on supply, affordability, and the rental market. There have been multiple government announcements and initiatives at both state and federal levels to address the issue. In today's webinar, we will explore solutions being proposed and considered and the progress being made to date. We'll also discuss demographic research, population growth and purchaser preferences, and the impact on our cities and opportunities for developers. We're incredibly lucky today to be joined by guest speakers Mike Zorbas and Natalie Field. Mike Zorbas is the Chief Executive of the Property Council of Australia. The Property Council represents the leading 2,500 organisations that invest in and shape our cities, from the largest listed entities to large private companies and essential advisory service providers. Property Council members are the stewards of every kind of housing, commercial, industrial, educational, health, retail, retirement, student accommodation, and build-to-rent city assets. Previously, Mike held leadership roles at Lendlease and Stockland and was Deputy Head of Media for the Liberal Democrats in the United Kingdom. He's currently on the boards of the Sydney Institute, ASBEC, and the Green Building Council of Australia. He is a former Deputy Chair of the Committee for Sydney and served 2 terms on the SBS Community Advisory Committee. Natalie Field is CEO of Informed Decisions, with 20 years global experience in innovation, strategy, customer, product, digital, data and technology. She's worked across multiple industries, including health, telecommunications and services, with a proven track record leveraging digital, data and technology to increase the impact of existing business models and unlock new growth opportunities. Natalie has a passion for leadership and uses her depth of expertise as a catalyst for change. Her work recognises that technology is everywhere and the need to create cultures that enable sustained competitive advantage and unlock exponential growth. By embracing the opportunity that disruptive technologies offer, she is focused on building innovative workplaces that are committed to people, employees, customers and community. Thank you so much, Mike and Natalie, for joining us. The residential property sector is critically important to the growth of the Australian economy. As Australia's largest business bank, I want to assure you that we're committed to funding residential development projects as well as affordable housing initiatives. We have a very experienced property finance team who have a deep understanding of development funding. So please speak to us about your next project so we can work together to support housing supply in Australia. We'll have time for questions after the formal presentations, so please use the Q&A function at the bottom of the screen and we'll get to as many as possible. And we are recording this session and we'll share it with you afterwards. On that note, I'm going to hand over to our first speaker, Mike.
Good morning, everyone, and thanks so much, Michelle and Matt and Kat, for having me, and great, of course, to be the entree for the main course with super smart Natalie. As well. But I did just want to say grateful for the support of NAB for our sector and your great partnership with a very large number of my leading members. It's a real honour to be with you today. It's also an honour to speak with all of you as well. The property industry is, in my mind, the best industry in Australia, hands down, and that is because of the people in it. Everyone on this call, you are all city shapers. You provide and support the city assets our communities need, whether they're residential, commercial, industrial, and I personally admire that hard work and the risk that you all take to make our cities better. Today I'm giving you that 20 minutes that Michelle spoke about on those fun topics, perspectives on the industry and the housing crisis, state of the market, of the recent policy changes nationally, what changes like deemed to comply, or the New South Wales Patent Book, or the Victorian Activity Centres and other reforms might offer us. Obviously, I'll only touch the surface. I may make some generalisations you disagree with. I welcome that. Let's have a chat about it in the Q&A. I'm going to pose a couple of further solutions to address the housing crisis, and I'll be professionally annoying and play favourites in terms of states and territories that I like the look of, who might actually be doing less of the wrong thing, or perhaps even the right thing on housing. And there are a few that have made more progress than others to date. So that you've got a sense of me, I started working for a specialist property company in Canberra in the late 90s, and obviously having worked then for Lend-Lease and Stockland, much larger listed entities with very large footprints around the country, in the case of Lend-Lease at one time internationally as well, I have that sense of everything from getting investments together through the design and development and construction, ownership and operation of properties, and also really what it takes to get through the regulatory hurdles and the approvals and the assessments, those many, many dozens of gateways that so many of our projects take to get through around the country. And I've worked in pretty much every state and territory at a practical level around approvals back through those organisations. I've also been the Property Council CEO these past 2 years. Very enjoyable role, I must say, and a great privilege representing our sector. As Michelle was kind enough to mention, we've got about 2,500 terrific member organisations, and my executive directors in each state and territory around the country are very proud and strong voices for our industry. And we've got to remember here too that we power 1.4 million full-time Australian jobs, which is more than manufacturing or mining, and I'm very, very proud of that. The Property Council itself also puts on a great series of events and learning development opportunities through our academy courses, and of course a lot of thought leadership and research driving our advocacy. If you're not a member, join early, join often. You can reach out to me on LinkedIn. As to what drives me personally, my first boss for that small property company in Canberra, Jim Service AO, really said to me two things. He said, building our cities essentially takes every ounce of human problem solving, from design to construction to community making, and that's why I like it. And the other thing he said was, be as provocative as you can whenever you speak in public, because otherwise people will forget what you've said. So hopefully I can provoke a little bit in your mind and your thinking, and we can have that little bit of friction in Q&A. As I happily say to many politicians around the country, planning systems have become mired in bottlenecks, over-regulation and delay. Tax settings punish rather than promote housing investment because governments aren't willing to control their expenses. We now tax buyers of new homes like we taxed alcoholics. More than $3 in every 10 of a new home in most Australian cities is tax of one form or another, whether that's GST to the feds, stamp duties at the state level, the worst of all taxes. They tax labour mobility, they tax right sizing, they tax your access to jobs and education and that ability to move around the country as people need, particularly in periods where we're not enjoying the low unemployment that we are at the moment. These are really pernicious taxes which governments have become addicted to. When I say that, 47% of the Victorian state budget is tax, above 40% in the other biggest states around the country, but they've all basically, over the last 30 years, really failed to reinvest that revenue that they get from our sector into enough of the infrastructure, or indeed the affordable and social housing that I think is their obligation, rather than generally late in the day posed onto industry. I also say this, obviously, with a smile and with a great deal of affection for people who take the time to be elected representatives. Very few politicians really understand the supply chains that create a home, the taxation burdens that impact those supply chains, and the vendor, and then ultimately the consumer. And too many, certainly over the past 30 years, and I'll talk about the more recent past because there's been a bit of a change in attitude, I think, over the last couple of years. Certainly too many have tended to shift the blame to other levels of government or even to our sector very unfairly for the housing crisis that we find ourselves in. Last modest piece of criticism in this section of politicians, many will say that they do support housing supply, but quite often it's as long as it's one suburb over and in that other politician's electorate rather than more directly. Again, these are all comments that I routinely make in public to the newspaper, so I'm happy for you to share them. Let me be clear, of course, too, not all community resistance to development is irrational. It just really takes on board the greater good of the state, of the country, and in particular the greater good and the interests of younger generations who are expressing that great dissatisfaction that they have in every opinion poll you'll ever read about housing, which of course has become one of the great barbecue stoppers of the last 20 years. And that won't change anytime soon. A problem that's 30 years in the making isn't going to disappear overnight. We have at least 10 years worth of hard work ahead of us to turn around the current sorry state of affairs. I'm going to talk a little bit about that. I think what has changed in the last 5 years is that those people that are tasked with delivery around this country for housing do realise that there is a measurable problem and that supply is 90% of that issue. Not that demand stimulus doesn't have its place if markets are broken, but that it is really the solution in a situation where supply is so constrained. Where does the market stand right now? Let's have a look at those latest domain figures. I think I've got about 10 minutes left. I'll run through this fairly quickly. May approvals rose 3.2, reaching 15,000 dwellings in that month. A modest lift, most of which fell in apartments and still well below 15,000, well below the 20,000 per month required to meet the very welcome 1.2 million national home target by 2029 under the National Housing Accord. That's where the Prime Minister and all the premiers have agreed we need to get to, and each state has its homework in that regard and its numbers that it needs to hit. Capital city prices, this is really interesting. The $1 million club is growing. The first time in those domain figures out the other week, 5 capital cities now have median house prices above $1 million. So we're talking Sydney, Melbourne, Brisbane, Adelaide and Canberra. Obviously, Sydney leading the nation there with a median house price now topping 1.7 million. So you can easily see a 2 in front of that by the end of the decade, and maybe even 1.8 by financial year end. That'll be really interesting to watch. Of course, that's a bad news story if you're trying to get into those markets. So that is a real challenge. And of course, the other news in that is that Brisbane and Adelaide are in that $1 million club now, a real structural affordability shift. Now, if you'd said that about Adelaide 5 or 10 years ago, people would have scoffed at you. But clearly that has changed, and probably, at least for the foreseeable future, in once relatively affordable markets. On the unit side of things, and this is important because a lot of state governments tell you they're going to do a lot more brownfields development, 70-30 in many cases. The combined capital city median unit price got to about 690,000. In Brisbane, Canberra and Darwin, that's a unit price growth outpacing house price growth. Darwin, obviously long considered the most affordable capital, has just recorded the highest quarterly unit growth in 8 years at 5.6%. And what this tells us is fairly simple. Housing pressure is no longer confined to Sydney or Melbourne. It's truly national. The growth in unit prices and the rapid escalation in previously affordable cities really does underline that. I'm just going to splice in a bit of Catality insight here. Their figures a little more recently still than the domain ones last week. They remind us Sydney and Brisbane are now at record highs, with Adelaide up 8%, that annual increase of 8%. And Darwin obviously surpassing its 2014 high, as I sort of implied in the domain stuff. Sales and listings activity is interesting. You're looking at FY 24-25, 530,000 up in terms of property sales up 2.7 year on year. New listings in June have dropped 11.7% year on year, and active listings have fallen 16.7%. That obviously suggests continuing scarcity. Median days on market increased to 35 days. What Cotality tell us on financing commitments is that they fell 3.5% in Q1 25. Investor lending now makes up 37.9% of new loan value, and first home buyer activity declined to 29% of owner-occupied loans, the lowest since 2022. I'm going to stop Kevin running you with all of this data in a minute. But I will just touch on rental market trends. Rental growth slowed to 1.3% in Q2, 25, the lowest since 2020. Annual rental growth is 3.4, which is still well above the pre-COVID average, of course, and gross rental yields there stable at 3.7, with regional areas leading at 4.4. What have we seen on the policy front in response to all of this and the tightness, that we know is waiting really for a couple of interest rate drops to be exposed? Certainly at the national level, that 1.2 million homes target, the Prime Minister, the Treasurer, all those state premiers backing that in. We've seen a little bit more of an attempt to fill that social and affordable gap. As you remember, 97% of the market is private sector. The rest really is government's responsibility and should be government's responsibility. They've pretty disgracefully left the field over the last 30 years in this space, particularly the last 20 years. And often that ends up with all sorts of policies trying to shift that responsibility back onto the private sector. It should be a government responsibility. We make enough money from consolidated revenue when you take each of the governments around the country and nationally to well and truly provide for people who need affordable and social housing in this country. One of the mechanisms that the federal government has introduced, which is very welcome, is the Housing Australia Future Fund. It's not the perfect way to do these things off balance sheet, but it's about a quarter of the way there, I'd say, in terms of the total expenditure the feds should be bringing to the table to plug that gap. Again, good that there is something there that they're attempting to do. It's not a simple process and it will have plenty of wrinkles to be ironed out, but it is heading in the right direction. And obviously federal funding incentives linked to state planning reform are super welcome. Where are we at? I've got about 5 minutes to go. So I want to see this reform momentum sustained. Obviously, targets are not enough. Implementation matters. You see this on the ground wherever you're trying to make development stack. Obviously, in places like Victoria, to a lesser degree New South Wales, it's the changes in taxes that occur on a seemingly almost 6-monthly basis that tend to spook banks, investors, offshore interests, capital partners of all kinds. That does harm confidence. And one of the things that we're really focusing on at the Property Council with our strategy over the next 3 years is getting governments, number one, getting governments to really remember that tax and investment settings matter, that they can really aid confidence in the sector and they can really therefore increase the flow of money that's required to build the best parts of our cities. There are too, of course, lots of dumb ideas that seem like they're trying to fix a problem that really ultimately is already sorted out by the system. The ACT's developer licensing regime is a classic gimmick that is dressed up as a solution, really just about the government there, pandering to a couple of sectional interests in the union movement. Not a helpful process for developers in the ACT. Nice things to be said, I think, about Queensland and South Australia. They're showing signs of improvement on the regulatory front. Still remain a bit patchy in delivery, but there are some real opportunities there. I'll talk a little bit about deemed to comply and patent books and activity centres here. There are certainly some seeds of productive planning reform in the system, and without these targets that we've seen nationally, we wouldn't have had any kind of reform, even if you think they haven't gone far enough, and I don't. I think they need to go far farther, each of these state and territory governments. There has been a real increase in the amount of top-of-mind thinking by state governments in particular about how to make planning faster and better and how to upzone our cities and get to that healthy, medium density mindset where we're really taking advantage of existing transport and job opportunities and job hubs, retail opportunities and so forth. And so that is starting to really be a well understood way of improving our cities in the minds of many decision makers around the country. Obviously, the more deemed to comply or patent book, as you see in New South Wales, where you can have a 10-day approval if you take a certain sort of relatively modestly dense resi design from their patent book, that's the sort of stuff that ensures fast, predictable outcomes at a granular level. When New South Wales introduces the second phase of that, the medium density stuff, 3+ stories later in the year, that'll be a real interesting move to quite rapidly shortcut planning. Of course, that's not the end of the story. That's not the end of local government involvement. That's not the end of the infrastructure bottleneck, but it does represent a mindset shift and an understanding that efficiency doesn't have to compromise quality or environmental performance or anything else. So that is a fantastic pre-approved solution idea that communities, I think, will come to value very much. Activity centres, transport-oriented development, all the familiar phrases from around the country that you know, where we consolidate urban growth around infrastructure, allowing communities to grow upward near transport and services rather than endlessly outward. These are a part of the solution. Obviously, you're always going to get the most affordable housing on the urban fringe. There's no doubt about that. But of course, those communities will wait, as they have in the past 25, 50, 75 years, a little longer for the sort of amenity, tree canopy and all the other things that people who are buying in inner suburban suburbs already enjoy. That is a traditional part of the Australian experience, living on the edge of any city, is that, gradual catching up to the level of amenity that you get in inner urban areas. Not that some of the master plan communities don't already start with a great deal of great infrastructure. It's just that it won't always be to the same, multi-generational standard that you see in inner urban areas. FISOs are still going to be challenged both in greenfields and brownfields at the moment, but certainly a lot of these ideas are going to help them shift away from discretion to delivery pretty quickly. None of them are silver bullets in their own right. I'm at 20 minutes, so I'm just going to say these following things to you. I'm backing that 1.2 million homes target. Not all the states and territories will get there. The point about this whole exercise is to measure who is not getting there, who's doing the heavy lifting, who's not, who needs to do more. Victoria's got a land advantage. It should be doing more. We've got to fix these broken planning systems, end tax volatility on new housing investment in particular. There is a big focus on training Australians and boosting construction migration, which historically has been 1.8% over the last 20 years. Clearly, there's opportunity in modular and prefab. Unlocking development airspace is a big part of the future too in our cities. Enabling those new housing types, student accommodation, retirement living, build to rent, some of which, of course, have been around for years, but we need more of because they're dense and they allow good service delivery. Investing in regional and corridor growth, and of course, dedicating a greater share of our tax take to affordable and social housing. I'm going to leave it there on that basis, and I'm going to say thank you very much again to NAB for having me. I'll pass back to you, Michelle, noting that with 30 years of really challenging conditions, we're not going to fix the situation in the next 10 years, but we can take the challenge on, have a proper crack over the coming years, and hopefully working together, get ourselves back on track on housing. Over to you, Michelle. Thank you.
Thanks, Mike. Natalie, we'll hand over to you.
Thank you so much, and thanks, Mike, and thanks everybody for having me. Let me just get a couple of slides up that I thought could anchor us in this discussion. Just confirming that you can see that.
Yes.
Great, fantastic, thank you. So thanks everybody. Let me just give a little bit of context to inform decisions and what we do, and perhaps the key topics of the discussion today. I think, really what ID is a prop tech that puts property in the context of place. And so for over 27 years, we've been supporting government and commercial organisations to make place-based decisions based on our independent fact base. And so it's the combination of our proprietary data sets, our proprietary modelling, and that ability to model from national level data sets right down to hyper-local, small area forecasts that help us to, give the information, the fact base to our customers to make decisions around where, when, and what, right? From land acquisition to AFL membership strategies, the application of this spatial data is very broad. So thanks so much for having me. I really think, if these topics inspire some questions, please feel free to raise them at the end or reach out to me on LinkedIn to have a deeper discussion. Importantly, ID, has an incredible depth of demographic, economic, and forecasting expertise, and they are really monitoring what I would say is and responding to key macro shifts in the demographics. What's important to understand is that pre-COVID, so from the late 2000s, growth was really characterised by generally consistent patterns of net overseas migration and orderly outward urban expansion of major cities. But the changes, of course, since COVID, of course, no doubt you're all very familiar with this, is clearly the affordable housing situation, which, Mike's talked a little bit about, the house price boom, the challenges in adding new stock, the bipartisan relationship, I suppose, around overseas migration shifting, which is making this an electoral issue. The government responses to freeing up planning regulations. We spoke a little bit about how that's occurring, particularly in New South Wales and Victoria, less so, of course, in Queensland. And this migration from metropolitan to regional, which is both because of, affordable housing, but also this impact of breaking down this traditional nexus of workplace and residence, which is really shifting where people want to live. So we're in this. What that means is, because we don't have a consistent and tested pattern, we're really in this period of uncertain and volatile population and housing forecasting across the country. And so I just wanted to anchor in that the numbers that I talked to today are independent. They're our independent growth modelling forecast, but they go beyond those simple factors, if you like, of migration, birth rate, death rate, and really account for land availability, policy, development feasibility, to show where, not just as population is increasing, but where are these people most likely to live based on the demographic patterns that they have. So things also that are included are things like the actual pace of development rather than a planned pace, land supply constraints and how this reshapes how and where cities and regions grow, the consequences of flooding and bushfire risk, feasibility, policy settings, etc., the impact that they have on supply. And of course, the really important part is the knowledge that when supply runs out, demand doesn't disappear. What we model is how that shifts into neighbouring areas, so high density development or places where new builds are still viable. The importance of calling that out is really around understanding that beyond the impacts and implications to our modelling, it's thinking about the big implications to different organisations. So councils, for example, need to understand the best use of land, right, and at all levels of government. Utilities need to identify where and when to invest in essential services and the capacity of those services. Transport infrastructure, roads, rail, public transport need to look at where they relieve that pressure and the business cases based on that demand. The social infrastructure, particularly things like healthcare, education, training, really need to scale to meet the needs of those changing communities. Retailers, and we've published a piece recently around retailers, but understanding how all of these shifts start to impact their network, their growth plans, where they need to be. And of course, from a development perspective and developer perspective, it's the consequence of all of those things and what that means to livability and demand in a region. And thinking about, well, what is actually commercially feasible? Is there sufficient demand now and into the future? Particularly, I think, talking about the potential latent demand of key workers in a particular region and the specific demand requirements and impact on product design. So we'll talk through that. If I just talk a little bit about the importance of housing, our annual views survey across the country, which we've just finished, what it highlights is that, and perhaps this is no surprise to everybody, but that the provision of affordable, decent housing is the second most factor for Australians in terms of the contribution to making somewhere a good place to live, which is second only to feeling safe. So in our recent survey, 56% of Australians nominated affordable, decent housing as one of the top 5 things that contribute to livability. But despite this high importance, Australians rate their local area experience as less than 5, so 4.5 out of 10. And that has consistently fallen in recent years from 4.9 in 23 to 4.7 in 24 and now down to 4.5. And so this decline clearly highlights that structural erosion of housing experiences across the country, exposing this gap between the value that Australians place on housing and their lived reality. And we have this data that goes right down into a local area. So if we look at our forecast population growth, so this is our latest forecast. Importantly, for context, this sits between the ABS forecast of high and medium growth. So clearly population growth is still strong, but it is absolutely slowing from the peak that we saw in 2023, so the post-COVID rebound. And, we're clearly seeing that there is high growth on the eastern seaboard, no surprises there. But WA is the fastest growing state over this time. And the two key things that really influence our numbers are, one, the migration policy hasn't had the speed of impact that was assumed, and two, the demographics and their behaviour is changing and has changed. So, for example, in policy, we assume that population stays higher for longer because we're not seeing students go home at the same rate that was assumed, and also just the overall net out has not been the same. And secondly, it's the demographic characteristics. So by that, one example is we're seeing, particularly with the student population, a shift to a higher growth in Indian migrants and students. And what we're seeing from that is they're actually staying longer compared to, say, what we previously saw with Chinese students who have shorter stays and then go back home. So it's overall a slower out migration. When we look at that, though, we break that down into what does that really mean from a demographics perspective. The highest growing groups in that population growth are seniors, parents and home builders, so those parents that have kids at school, so primary and secondary school, and students. So obviously that's from a property development perspective really makes it important to understand specific local nuance of what that means to build the right product in that location for now and needs into the future. So the broader implication, of course, is that where the demand will come into smaller household size. And we've seen actually that that household size decline since 2005. And what we're seeing is this mismatch in our forecasting, this mismatch between the household size and the actual dwelling stock that's available. You know, obvious example is really the aging population. So they don't have to move. They're usually, what we're seeing is one or two people living in larger dwelling size, but they would move if there was the appropriate stock. But importantly, they are really wanting to stay locally. It's a generalization. But overall, we are seeing they want to stay locally because they have family, friends, social networks. And so there needs to be the incentive to move from the bigger home into a smaller dwelling. Because of understanding this life cycle, clearly this doesn't stay the same. From a demographic perspective, there is a cycle of moving through these different age groups. And so importantly, it's understanding that it's not just density is good, it is clearly good, but diversity is better because it caters for the evolving needs of communities. And so when we think about this high growth in these areas, we really need to think about from a product perspective, how do we both cater to the needs of this growth group, but recognize that we need to also cater for the people that will service those groups. So things like key workers, for example, that will provide the services to the communities that live in that region. So you need to be able to attract, from an aging population perspective, also need to be able to attract some of the age, the workers and young people. So when we look at hotspots, not surprisingly, based on the previous where we're seeing the growth on the eastern seaboard, we see a lot of our hotspots on the eastern seaboard. With the exception of City of Melbourne, all those fast-growing areas of Australia are really city fringe, so low-density areas, or regional hotspots. Think of Busselton, for example. And that is, as a result, happening in that greenfield land, particularly greenfield land close to cities. What we know, and then from a forecasting perspective, we're starting to model in, is that whilst these areas are the hotspots now, we will expect that to change as we see that the actual supply of greenfield land obviously declines, and then that expectation around what that means in terms of density. So we know that Melbourne SEQ not constrained geographically, whereas Sydney is constrained. And the question is going to be, from a modelling perspective and looking at how does policy evolve. You know, Mike talked a little bit about the TODs. So we're really getting into the depth of understanding TODs and what does that mean. We know there is unmet demand in inner and middle cities. And so we're not seeing that as high growth yet because we're not seeing the supply match the demand and what the citizens are looking for. I think what's really interesting in that, we did deep dives with City of Melbourne to look at their unmet demand, also Macquarie Park in Sydney. And it really shows that some, not surprisingly, but some of the TODs are more feasible than others. And there absolutely would be more growth in those areas if it was allowed from a planning perspective based on the demographics and how that is changing. So I think, Mike talked a little bit about, as we change policy rules and have higher density, it to some extent is going to be a demographic experiment around, because of the Australian experience and expectations, how we see different groups move into those higher density places. And for us then mapping that back and understanding the depth of livability and what those cohorts value, it will be an incredibly important part of design and product design. So whilst these are the top 20 hotspots at the moment, clearly we all know that not all population growth is the same. The people that are going there are very different. And the factors that influence this obviously vary by all these locations. It's things like the total population growth, but it's also the household formation. It's the income level, employment opportunity, access to services, amenities, transport activity, and the overall affordability of an area and livability. So you will back on my previous slide, earlier one around livability, the third beyond next to housing, the most important thing for Australians is access to green space effectively. So that is an incredibly important part of consideration of design, both for outer ring greenfield development as well as the densification of inner and middle. What I think this really highlights is the differences, say, between Melbourne, Logan, Busselton. They are very different, and therefore the diverse dwelling options is really key to ensure the residents find suitable homes within their community at different life stages and avoid that pitfalls of, homogenous housing stock that can really lead to social and economically imbalanced communities and therefore are not viable for the long term. And we're certainly seeing that in parts of Australia now. So because of these, profile differences, we're really, we're working with customers and a whole range of different groups around understanding this depth and the interrelationship between demographics, economics, livability to make really great decisions based on both now and into the future. If we just then, what I wanted to do is is talk about one particular example that I think is an interesting one in the context of property development that we're doing more and more work in, where beyond demographics and looks at all the demographics, but looks at the economic contribution of a region. And I think, understanding the key workers in an area, I think is a really exciting opportunity to understand latent demand for dwelling and implication to product design. So historically, key workers were assumed to be low income, but we definitely saw through COVID that has become a much broader definition. And there is a really broad spectrum of incomes across the different key worker groups within a region. And we're seeing clearly, and Mike talked about this, but middle income earners are being pushed out of purchasing. Renting is still a challenge. And so they want to work closer. They want to live closer to their work. And we could, I'm sure in the Q&A, we can talk a little bit about impact of productivity in that as well. But as a result, it's not about the people who, we've really got a deep understanding of not just who lives there and their demographics, but who's visiting there and therefore being able to tap into that unmet latent demand and the implications to that. So if we, beyond Melbourne, a good example is Noosa. We're seeing that if we look from a population forecast perspective and how that's evolving, in the next 10 years, close to 30% of their workforce are going to hit retirement age. And so, and a large part of those key workers are healthcare. But right now, the average healthcare worker can't afford an apartment in Noosa. And so to have the viability long-term in that area, understanding the dwellings and the stock and the product design to meet the needs of existing but future workforce and population is going to be really critical to both, I guess, from a commercial impact for property development, but also the viability and livability of that location, which clearly then has an ongoing impact to demand. So City of Melbourne have been really going deep and have gone deep in understanding those key workers in their region and understanding that 1 in 3 of those workers that have the economic contribution are considered key workers. And the reality is key workers is different to each area. Not every region has the same type of workforce. So it's important to understand that nuance when you're looking at product design. And we know that from our population forecast, we know that those key workers is going to continue to grow, and therefore the demand for that sort of housing grows. And it's beyond, of course, it's beyond apartment. It is looking at medium to high, but beyond, apartments isn't the only solution to that. So I think I've lost track of time, but if I just, I might just close on a couple of points here. What's really important to understand is for this audience is to, if you're not already, go beyond those high level growth assumptions, not just looking at it nationally and not just looking at a state level, but look at a constrained forecast across the country, but right down into a hyper local area and what impacts that has in terms of demand, property mix, acquisition strategy, to really understand the actual pace of change. So beyond just because an area is identified as high growth, it doesn't mean that growth will happen at the speed and scale anticipated. And we've seen lots of examples of that. And that obviously impacts feasibility and exit strategies that really need to be baked in. Really looking at designing and evolving the product based on that changing demographic and the changing patterns of demographics. So looking beyond those total numbers, looking at the life cycle of residents, and as I mentioned, looking at those key workers to unlock potential latent demand. Because those macro and local shifts mean we need diversity, not just density. And then the last point I think is less about the data, but what we're seeing, particularly with our young Australians who are looking for housing options, they really rate access to green space higher than any other segment from a demographics perspective. So I think the thing for us to balance is to keep that demand high is also to not overlook livability in a crisis. If we're talking about the housing crisis, how do we not just respond with more, but how do we do that in a well-designed fashion? Because when we understand those specific community views, I think it gives you social license to build and respond to that demand, which I think is going to be increasingly important from a demographics perspective when we're looking at infill, brownfield development. So thank you so much, and I look forward to some good questions.
Thanks, Natalie. And Mike, I'll get you to join us as well. So if you've got any questions, please pop them in the Q&A at the bottom of your screen. We do have a couple around taxes, which Mike will direct to you. So some recommendations around changing negative gearing and capital gains. If the government decided to proceed with change or to dismantle negative gearing and capital gains, what do you think would be the impact on the property market dynamics in terms of supply and demand?
Yeah, look, it's a great question, actually. So all the modelling that I've ever been privy to, and that's, modelling that we've done, modelling that other groups in the sector have done, would tend to suggest that most of the previous versions of CGT negative gearing change, and remembering that negative gearing really is a very basic taxation treatment that is in no way exotic or interesting, although the CGT rate is perhaps of more interest to people, and particularly in terms of government revenue. It's about $5 billion per annum federally. Negative gearing's worth about $2 billion, so a total of about $7 billion there. None of these changes that have been modelled, including the recent stuff from McKell, actually add to supply. Now, some of them don't diminish it by very much, but for me, the test is if you're going to tinker around with $7 billion out of a $650 billion federal budget, you really would start with proper tax reform of any variety. So either a broadening of the GST with, appropriate social safety nets and an increase in the rate of the kind that was essentially proposed by Ken Henry, what seems like a lifetime ago, or indeed, as Chris Richardson is a champion of, the stamp duty land tax swap, because stamp duty is such a bonkers inefficient tax. It is off the charts when you chart the incidents, as they did in the Financial Review yesterday, of just how bad some of these taxes are, that they actually destroy value far greater than they create, in terms of economic value. So I would start with either of those, not too fussed which, as a starting point. If we're going to undertake tax changes in the housing sector, they would definitely underpin, efficiencies in terms of greater housing supply. And again, there is an obligation on people who are proposing change to show how they would actually add to supply. And so far, again, the independent modelling I've seen says that none of those yet do. It could be that someone will come up with some clever tweaks at some point that actually get you over the line on housing supply. But until then, I don't think it's really going to create more rental stock.
Thank you. And then thoughts around the tax on unrealised capital gains and superannuation assets over 3 million?
Yeah, look, full disclosure, this might affect me one day. I'm not against progressive rates of taxation. I think if you're super wealthy and you're well set up, you should pay your fair share of tax, and that's fine. But unrealised capital gains as a part of this scheme is a bit of an issue. It does create real uncertainty and is going to encourage, I think, further gaming that has unintended consequences that's not even in the interest of the ATO or indeed the government. The fact is that unrealised capital gains haven't happened yet, and introducing that concept here is a precedent that could easily spread, as we know some, less, useful ideas do sometimes get a sort of viral load going and spread into other areas of tax life. And, if the government's got an abundance agenda at the moment, making things simpler rather than harder, definitely, should be part of the aim. So definitely would consider taxing unrealised capital gains in any format at any time to be a poor piece of tax design.
Thanks, Mike. And for both of you, we've got an economic reform roundtable in August. What do you think the government might do in the housing space there?
Natalie, do you want me to start, or would you like to have a crack? You're happy for me to go. Look, it is really interesting to watch 1,000 ideas bloom, isn't it? I think I've seen 20 serious tax reform ideas. We've just touched on 2 or 3 of them. There are plenty more out there. There's a whole bunch of red tape that people would love to take a Elon Musk style chainsaw to. That's all looking very fun. I think in our sector, I anticipate that the government will try to look at some of the environmental assessments for existing applications before the department. So the EPBC Act in Canberra probably has 50,000 homes being assessed within it. The processing of those homes has slowed down by about 50% over the last 3 or 4 years. Obviously, for a nation with a housing crisis, 50,000 homes is a material amount. So you wouldn't want that to slow down anymore, would you, if you were busy trumpeting your 1.2 million home plan? I think they're going to try and accelerate, the fair and appropriate analysis of those homes. I think they're also going to look at other aspects of red tape, particularly around the National Construction Code. How do you make that a real living document that everyone buys into, that can be regularly updated and harmonised around the country without making it impossible to follow and have states peel off the process? We don't want the curse of federation where every state goes their own way and makes their own special arrangements, because you want organisations to be able to grow and build homes in every state and territory if they want to, and so forth and so on. And we should have a harmonised process for doing that. But they're definitely going to have a look at the efficiency of that process and how they can make it better and respond more to industry realities. And I think that I would hope for as another small but important change that might come from this roundtable. Natalie, over to you. I've crapped on enough.
No, great. Thank you. I think, look, what we're seeing from a demographic perspective, and I talked a little bit about it in the key worker, but when we dig a little bit deeper into that, there is that latent demand, and because of the productivity impact of people commuting, taking long commutes to get to work. And so we're starting to see some really innovative organisations, I suppose, across multiple sectors who are looking and understanding at that problem where they're trying to just be able to get more hours from their existing workforce. And they're recognising clearly transport has a huge role to play in that, but also the availability of childcare. So there's some interesting in Eastern Victoria, coastal Eastern Victoria, looking at actually because of the high demand from a key worker perspective, high demand for healthcare workers in aged care, one of their big factors is just around getting more hours from the existing staff because of access to workforce. So looking at actually how do you create solutions to incentivize and frankly just enable, beyond incentivize, just enable that. And we're seeing, I think, lots of this mixed use development where it's aged care plus childcare plus retail. So you're actually creating diversity and as well as providing those transport links. And we're really seeing the impact and the downward, I guess, the negative view on productivity because of this, the proximity bias that happens when we move to the outer ring and regional areas. So I think what we have to take from that is this really is a system problem. And how do we look at those multiple dimensions and look at a single fact base and a common fact base to make those decisions across one of these areas that has a, really looks at housing is actually a huge contribution to productivity.
Thanks, Natalie. And then just staying with you, calling out the size of properties in Australia versus other locations globally, how do you think smaller properties will be part of the solution for the housing crisis in Australia?
Yeah, great question. As I mentioned, we are going to see this demographic experiment because there is absolutely demand for smaller because of the big growth cohorts in students and aging population. But there's also the critical thing is availability to green space and that shift away from the Australian dream of a large property with a backyard to moving to those medium density. I think the big thing is actually it's about putting the balance, and we're seeing this in some of the TODs where we've got the low density but mixing with higher, medium and higher density options, and that provides diversity in a specific region. So that's going to be what's super key. And obviously, because as I mentioned, the aging population are very willing and looking to downsize, but they don't want to leave their region. They don't want to leave where they've built their network and their community and their family connection, but there's not always that diversity of stock for them that's at a price point that makes it, smart to cash out. So I think that's what's going to be the key. Again, looking at that in a cycle within a particular community rather than just looking at that medium to high in isolation.
Okay. And then you mentioned earlier, and we saw during COVID, that real move to regional. And we saw particularly, lifestyle migration to Southeast Queensland. Do you see that continuing and how do you see that, morphing?
Yeah. So I think what's going to be very telling is next census around exactly how that has played out in terms of the relationship between remote working and where people have moved and consequences to that. And I think it'll be some data we'll absolutely do in line with productivity as well and expand perhaps the productivity assessment. What we say, like at the moment, we absolutely continue to see that growth in Southeast Queensland, but what we're seeing is sort of the spillover from, say, Gold Coast, where the demand going into that region in future is going to be more people looking for smaller, so less families and obviously the affordability. So what we're seeing is a big shift back into Logan. So the growth is absolutely happening. I think where it's going to get really interesting is how the planning rules change and how we look for both like attractive dwelling stock for that different diversity. So at the moment we're absolutely assuming that there will continue to be growth and it's not impacted so much by the shifts in the remote working. But I think what we're seeing to be emphasized, particularly in SEQ, Sunshine Coast is a good example that I mentioned around that the workforce is starting to retire. So how do they make it attractive and affordable for the younger workforce to go there and continue to offer the services, as opposed to that area decline economically?
Okay, thanks, Natalie. Mike, for you, obviously, there's momentum for reform. Is there a single opportunity, low-hanging fruit that you'd love to see happen today?
Look, I think we're in a 10-year cycle to get back to where we should be. And when I say where we should be, if you look at the work done by the ex-RBA economist Tim Reardon, we're talking 1.3 million homes behind where we should be today if we'd only had the same productivity in house building that we had up until the late 1990s. So there is that huge gap there. If I had one thing that I would do, I think I would probably really reshape the tax compact. We just charge so many more taxes at the point of new home purchase in this country than we should. And I mentioned the fact that we basically tax first home buyers like we would tax alcoholics. We almost are saying to people, when we're asking them to pay $3 in every 10 of a new home in tax, that we don't want you to do this, that we don't want you to create that demand, that we don't want you to follow through on buying a new house. So we are really penalising people at the point at which I think most of us would agree, if they're going to own their own home, they're going to be able to have that dignity of shelter on a permanent basis. And that's a strange message for our society to be sending them, to tax them in that way at that time. It's also reminiscent, I suppose, of cigarettes. Again, something you don't want people to overindulge in. So we have to change that mentality, and we also have to settle, once we have decided that, on stabilising those levels of taxation. One of the big issues for a lot of people is, you can't get a fix on exactly how much you're going to be taxed in a place like Victoria, because it literally changes every year. This year they've got a congestion charge. That's a tax. They're going to bring in infrastructure contributions. That's a tax. Last time, a couple of years back, it was a windfall gains tax. These are all not only additional numbers dropping off your balance sheet, but they're administrative. They have a burdensome legal and other, impact, particularly on small businesses. It's easy enough for some of the larger players out there to absorb this as cost of doing business. But if you're not surrounded by an army of accountants and lawyers, this is genuinely money you cannot afford to do anything with, but to pass on the cost of to, the end user. And again, that is mitigating against affordability. So we've really got to get our tax stuff sorted out in this country, and obviously, have a lot more state, approval of housing going on. There are some great local governments out there who do really good work, but it is a patchy experience. And ultimately, we just have to lift that lowest common denominator right up. And if that means state intervention, or the WA style, $2 million, and you can, choose to avoid your local government and have it reviewed by a 5-person DAP, only 2 of whom are local government and 3 of whom are independent experts, then, those are the sorts of things. And of course, you have those in New South Wales and other places, but that's actually a really broad-based scheme over in WA. Not perfect, but an improvement. Those are the sorts of things you could look at. That was a long answer, and probably fudged 2 answers into your one question, Michelle.
Well, we do look forward to you advocating on our behalf, Mike. So thank you. So I hope everyone's found today's webinar interesting. Thank you so much to our presenters, Mike and Natalie, for sharing your insights. And thank you to our audience for dialing in. For our customers on the line, I'd really like to take the opportunity to thank you for your custom. We do appreciate your business and the relationship that we have with you. And we're committed to working with our customers to finding solutions together. So please speak to your banker about any new opportunities and needs that you might have. Given where the interest rate environment is and market volatility, there has been some really good hedging opportunities, and those opportunities are likely to continue for a while. So if you'd like to explore interest rate strategies, please let us know and we'll put you in touch with our market specialists. You will receive a survey as the webinar closes. We'd appreciate it if you could take the time to provide us with some feedback and also any suggestions for topics for our final quarterly webinar for 2025, which will be in November. So I'll look forward to seeing you then. Have a great day. Thank you and goodbye.